This is part 5 and the final part as to why we don't recommend investing in the traditional 401k. In the previous videos, I mentioned 4 ways the 401k is failing us. So now let's get into the 4th reason, which is arguably maybe the most important reason, and that's tax policy. The traditional 401k is a pre-tax plan, so you actually defer paying tax right now, get it into that pre-tax bucket. It's gonna grow tax deferred, so once you're retired, that's when you pay your income tax. As disruptive and damaging as market volatility is, I believe that taxes, future taxes, and tax increases will be the biggest threat to your wealth and retirement security for the next 10 to 30 years. Taxes will be what destroys America's retirement dreams. Why? Well, because for nearly 40 years since the 401k's inception, Americans have gotten so used to the instant gratification of getting that tax deduction by deferring their tax in a traditional 401k account. The 401k has essentially conditioned individuals to want and need a tax break just for accumulating wealth. Let's say you call a friend and ask to borrow a few $1,000s. Your friend comes over with a check, but in the memo line, they have written in it loan. Now, before you accept this loan, you want to know a few things. You would ask them, well, how much do you want me to repay and by when? Because it only seems logical that you want to know the terms of the loan. But what if your friend said, you know what? I'm good right now. I don't need any money. But someday in the future, when I do need money, I'll come back to you and see how much money you have. And then I'll tell you how much money you have to pay me back. Now, how many of you would accept a loan with those open-ended and ridiculous terms, never having any idea how much of your future wealth it will cost you? No rational person would accept that loan. But that is exactly what every single person utilizing a pre-tax retirement plan is doing. As our national debt continues to grow, it is more than just likely that tax rates will go up. Conventional wisdom tells us that we will make less money when we retire. The funny thing is, most of our clients want to maintain their same current lifestyle in retirement. So this means they will roughly have the same amount of cash flow in retirement as they did before retirement. We know that we only win the pre-tax game if tax rates stay the same and we make less money in retirement, or tax rates go down. So in order to pay less taxes in retirement, we're essentially betting on income being less in retirement or tax rates going down. And that completes our 401k mistake series. For more wealth building tips like these, follow or subscribe and like for more.